The Ministry of Finance in UAE has just announced that effective June 2023, they are going to be introducing corporate tax. So before we all panic, let's dive in and find out a little bit about what the details are about, how it's going to affect you or people around the world, what it tells us a little bit in terms of the direction of probably UAE, but as well as some of the other countries in the world. And we're going to talk about that right now. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. I'm Michael from Offshore Citizen. Thank you very much for being here. If you would like help with the topics we deal with here, which are relocating to foreign countries, getting residencies, citizenships, forming companies, opening bank accounts, international tax optimization, etc., please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer. There's a link in the description below, or send a message through our websites, offshorecitizen.net and offshorecapitalist.com. Okay, so I'm going to quickly read through for you a few of the things they have to say about this. For the record, they are saying the corporate tax rate will be 9% at that point in time. One would be able to get an exemption from this if their income is below 375,000 dirhams per year. This is low. It's like pretty much exactly 100,000 US dollars per year. So it's a very low threshold, even compared to the small business rates you see in various different other countries. And so let's go over some of the nuances in the announcement. Now, recognize this is a fresh announcement, so a lot of the details we will find out how they play out over time, okay? So first of all, individuals will not be subject to corporate tax from employment, real estate, investment in shares, or other personal income not related to UAE trade or business. So the important thing to note is personal taxes are left untouched. Personal taxes are still zero. So that's good. If you kind of look at where they're positioning themselves in the world, I think it's kind of obvious that Qatar has 10% corporate tax, zero personal. UAE comes in at 9 and zero personal. They're trying to put themselves in this place where they're competitive, but still creating the image. And I do think that it's very much an image-driven thing for the rest of the world of not being a pure tax haven. So that's one of the things we can mention. Now, no corporate tax will apply to foreign investors who do not carry on a business in UAE. Corporate tax will apply on the adjusted net profit of the business. It's profit, not revenue. Free zone businesses that meet all necessary requirements continue to benefit from corporate tax incentives. This is pretty important. So we'll see what that means in practice, but it may mean, at least for a period of time, and at least to some extent, that free zone companies could be exempted from the tax regime. And this is pretty common in various parts of the world, that you'll have a special tax regime where there's special treatment for certain types of companies in certain areas, etc., that are different from the general rules. And of course, most people in UAE do have free zone companies. Again, we'll see how that plays out and what the restrictions are, but it's, I guess, kind of good piece of better news than hearing that they were just going to be taxed. Let's put it that way. Extraction of resources will remain the same. Yep. No withholding tax will apply on capital gains and dividends received by a UAE business from its qualified shareholding. No corporate tax will apply on qualifying intergroup transactions and restructuring. Foreign tax will be allowed to be credited against UAE corporate tax payable, and generous loss transfer utilization rules will be available to businesses. So those are kind of the highlights. Now, the thing I think is worth understanding is, where is this coming from? And I think it's fairly obvious. We had moved towards global minimum tax. This is below the global minimum tax, by the way. So I suspect that over the next while they will implement that sometime in the next, between now and 2030, when is the deadline that they're supposed to implement it by. Where for large companies over 750 million a year, this minimum tax will apply. And to be honest with you, if you think about it, it's kind of practical on their behalf in light of a minimum tax, because what the minimum tax rules state is that if the local country doesn't charge at least the minimum tax, then the foreign country can tax it anyway, right? So if you have an American company that's operating in UAE and it's not being taxed at 15%, well then UAE gets nothing and the US grabs that 15%. So there's something pragmatic for larger businesses. Where, I'm somewhat surprised is they weren't more graceful on smaller businesses. And to be fair, the way they do things in UAE is They often throw something out, kind of see how the market responds to it before actually implementing it. And so there may be some modifications to this. A good example of this was when they brought in the new rules around some of the citizenship and golden visas, etc. They improved them afterwards. Now, we'll see what happens in this case. I don't think that this is an altogether unsurprising trend. It does emphasize something that I have mentioned for a while now. If you go back and watch my videos from, I guess it was about a year ago, talking about global minimum tax, what I was discussing was how personal tax planning becomes much more important in these situations, because there's ways then, so long as you can earn income personally, to not have to worry so much about the consequences at the corporate level. And definitely we're seeing, there's hasn't seemed to be much of an attack on personal tax rates. More it's been on corporate tax rates. And I think partially because, if somebody's going and living in a low tax country, they weren't taxed by their home country anyway. Whereas if a company that operates multinationally is able to shift profits to a low tax country, that's seen as abusive, negative, etc. And so it's a more obvious target. I suspect over time we'll see continued pressure on tax havens. We're going to have like the global tax cartel. At the same time, we have these countervailing forces, which are crypto, is making it more and more difficult to collect, and will probably, I would say over the next 5 years, put a lot of pressure on how it is that people collect money. And at the same time, you have the tendency of some countries that have been beaten down, such as Italy, Greece, etc., to try and attract more people there and give tax incentives. So there'll be a little bit of a schism. That's my guess. Anyway, what I think it means more than ever is that personal tax planning is really, really important. It's not sufficient just to do corporate, although corporate, is obviously important in certain cases. And where you live becomes more important because of the fact that it's not as easy to simply shift your company to another country. So I hope that helps. Let me know what you guys think in the comments below. I'm going to look forward to seeing you on the next video.